Once again, good evening, everyone. Thank you so much for joining this session. Today's webinar is on investing in the innovative industries. My name is Yogesh, and I work as a global market strategist with Century Financial. We'll be talking about disruptive technology today and what are the investment avenues where a common investor can invest apart from your conventional investments, what you're already doing. And we normally do these webinars on different topics. I did a webinar a few days ago on cryptocurrencies. Then we talked about blockchain. We talked about trading strategies. We talked about earning season. And this is something which we do to spread more and more awareness and the risks in financial markets and how to manage those risks. So thank you so much for joining this. And all of you can use your chat options to ask if you have any questions. I will be able to answer these questions while we are doing this session. Or if I'm not able to answer any of the question, definitely one of my team members will definitely be in touch with you and give you the answer to those questions. So please use your chat options. Tell me if you can hear me properly, if the audio is clear, if the presentation, you can see it right now. Give me a yes or a okay or anything just to make sure that I want to make sure that you can hear everything, you can see everything what I'm presenting here. And I know webinars can be very boring at times but that's what pandemic has led us to. We have become more efficient. We are using more and more softwares which are like Zoom, Webinar, Jam, and I think this is something which is the future. So kudos to all of you to be connected to this technology and joining me. Before we start, needless to say, I will talk a lot about investments in different areas. But please understand, this particular session is more for information purposes. If you want to invest in any sector, you need to calculate your risk and your reward. Need to talk to a financial consultant or an expert before you invest money into any of these sectors which I'm going to talk to about. So that's the most important thing. Just consider this as an information and then ask your questions on the chat. Let's begin this first by seeing what's going on. I mean, apart from the topic what we are about to discuss, the most important thing which has been going in last 2 days, markets have been coming down a lot. So a small brief about what happened off lately with the financial markets, why stock markets have declined. If you see US, Europe, Asia, especially Chinese markets have declined. One of the most important reason behind this is the continuous collapse of, first of all, it started with the whole Chinese tech sector. And after that, now there is another issue, which is with the real estate sector in China. One of the companies, which is, if you Google searches even now also, it is called Evergrande. And Evergrande is a company which is a real estate group in China, and it is the second largest property developer in China. And it is going through a lot of crisis because of their debt payments, and markets are caught up in the grip of these fears, which have of lately started. Now, global stock markets, if you see yesterday, if you see today, there are still a lot of fears which are sparked by troubles at this particular company. And the risks are growing in the Chinese real estate sector, especially Evergrande, which is the second most highest property developer. And it is expected that they might default on their massive debt, which again is adding a lot of selling pressure on the Asian stocks, along with global stocks as well. Now, the stock itself has fallen down more than 10%, and it is due to pay around 307 million dirhams if I was to compare and if I was to use the denomination dirhams. They are also due to pay an interest on their bonds, which is also pending. And I think there is a analysis in the market that the bonds would default if Evergrande fails to settle the interest within 30 days of the scheduled payments. So Japanese markets also fell, US markets also fell, European markets also fell, because it's like a chain process, right? At times we see that if a real estate sector falls, think about 2008. What happened in 2008 in US? The US property prices start collapsing, which brought recession to the entire world. Imagine one of the second largest real estate developer in China, and what happens when they start getting defaulted. Uh, so property prices collapse. If property prices collapse, imagine what will happen to the financial sector, to the banking sector, because mortgage interest rates will suffer, right? So the one industry is connected to the another industry, and that's why something like real estate can be much more riskier than actual stocks at times. So that is the reason that why stock markets are down. Um, in the case of if you are taking an exposure in Chinese equities and Chinese stocks, you will find a lot of stocks which are discounted at a great value. But please make no mistake, you need a really brave heart to enter into Asian equities right now, because while we see a lot of companies like Alibaba, JD.com, Baidu at record lows, it will take, you have to take it with a pinch of salt, where if you are adding these kind of companies in your portfolio, be ready, it might come down and you might have to hold on to that for a longer period of time. So there is a risk if you're going for Chinese equities. This is just an added extra market information because this is what is going on right now. So a lot of investors, when they entered, they asked about this question, that what's going on with the markets, why they are going down. So that's precisely the reason. And the ongoing Delta variant risk is always there. So anytime something like this happens, it gets topped up with the risk of Delta variant growing, and that is also one reason that why market sentiments are quite negative at the moment. So it's one of the more reason that why we have assembled today here to talk about what's going on. Is if you are already invested into equities, that's one thing, but let's look forward to the more futuristic part, to the more innovative part of it, because there are sectors which have existed in this world for decades. But sometimes when specific sector starts picking up, like cryptocurrency, for example, Bitcoin has existed for a decade now. It started in 2008, went up in 2010, 11, then went down in 2014, then again went up into 2017, then again came down in 2018, and again 2020 it bounced. So sometimes there are specific years where these sectors they start growing, and that's where we should talk about them. So 2020 and 2021 has actually been an era of disruption, because when pandemic happened, there was a lot of pandemic induced growth. And I keep talking about disruption and innovative industries. What is disruptive technology actually? Because it is a common law of investing that the most rewarding opportunities are often the riskiest. And that is certainly the case with the today's disruptive sector, what I'm going to talk about, the disruptive technology. And the rewards of investing in these innovative tech stocks, it has been enormous before. Take example of Tesla, for example. I'm sure, okay, use your chat options. Tell me what is the current stock price of Tesla? Even if you Google it, it's fine. If you don't Google it, if you just remember what was the last stock price of Tesla you checked, just give me a rough number. And I'll also be using the live platform to show you the real-time prices. So let's make it more interactive. Use your chat options. Tell me what is the live price of Tesla right now, the stock price of Tesla, not the car, the stock price. Okay, I started getting answers now. Perfect, perfect, perfect. Okay, I'm really glad some of you are not searching for it. So you're giving me an approximate, but it's quite on point. So it looks like you have been tracking Tesla. That's great. Okay, okay, perfect, perfect. Okay, great, great, perfect, nice. So around 740, 742, 743, which is going on. Tesla's price, and this is the stock price which is split already. So when I told you take example of Tesla, Tesla share price skyrocketed from $90 in 2020 to 900 in early 2021. So when we talk about the risk, as an electric car maker, the stock fell nearly 40% from its all-time high this year, which punished investors who bought in late. But at the same time, it again bounced back. So all I'm trying to tell you is that these are the sectors which are innovative, which are disruptive, but at the same time, the risk and rewards are both. So that's why I told you that do thorough analysis of your risk and reward and then only enter. Now, what a disruptive technology is, I'm talking about this disruptive, what actually it is. Disruptive, the word means a radical change to an existing industry or any specific market due to a technological innovation. Like it introduces a technologically enabled new product, and that potentially changes exactly how the way the world works. Like take example of a telephone or electricity. Telephone was a disruptive technology, electricity was a disruptive technology, automobiles. So all these technologies, when they come in, when the first time the car was made, the world's productivity, it increased, and the cost of making these products continue to decrease, right? And it created so much demand across all these sectors. And today, the entire global economy, it is undergoing through the most significant technological transformation in the history of the innovative platforms. And why it is? Because a lot of this advancements is actually COVID induced. Tell me how many of you, okay, let me create this poll, it will be much more. How many of you use Zoom, Microsoft Teams, both? Any other? Okay. Few. Okay, I have issued a poll right now. I'm conducting a poll. Tell me, how many of you use Zoom or Microsoft Team or both of them or any other platform for your meetings these days? If you don't, then don't vote. But just wanted to know, because when pandemic happened, everyone and anyone who was working from home started using either of these platforms or any other platforms. But even after now, when the cases seems to be going down a bit, um, people have gone back to work. Lockdown is not there anymore. Life has started back. I'm sure many of you are still using Zoom or Microsoft Team or both of these platforms, right? Some of you are using any other platforms, Google Meet or something. So I see here almost 22% said Zoom, 22% said Microsoft Team, around 55% said both of them. So basically now what is happening, if there was no COVID, maybe for the another 4 or 5 years, we haven't been introduced to this kind of technology. This has existed before. Zoom existed before. Microsoft Team existed before. But how many of you were actually using this in your teams? Very less. We would expect to meet people face to face. But because of COVID now, this technology transformation has actually paced up. And that is the reason that why we have assembled together to actually talk about it, right? So disruptive technology itself means a kind of a radical change which comes due to a technologically enabled new product. Now, we have seen historically also that whenever an emerging technology has come across, it has transformed some of the major industries, and it gives a lot of investors to an opportunity to build wealth, right? Talk about think about smartphones, okay? In when it was the year 2000, when a smartphone actually came, all those phones with the flip, cordless, everything went out, right? Now most of the people, all they have is smartphones. That time it was 3G, then it was 4G, and now it's 5G coming in. So innovation is the key to the real growth, and that's why we have assembled here to talk about it. Now there are a lot of such sectors which are existing, major innovative platforms evolving in the underlying technologies. Now let's look at some of these sectors: artificial intelligence, genomic revolution, robotics, clean power, blockchain technology. Now, let's understand each of these sectors. And I'm going to show you not only how this sector has uh, transformed everything. Which I'll also tell you which sector. So on the right column, as you can see, have a notepad. I normally keep a notepad most of the time when I'm listening to such sessions. I keep writing it. Although you can always talk to your relationship managers, take demo accounts, and do that. But if you find something which is a bit interesting, you can take a snapshot or just write it in your notepad. Um, Artificial intelligence. When we talk about lot of learning systems, like the artificial intelligence based learning systems, it has the power to transform all sectors in the economy. Like a few years ago, I would never think that there can be any disruption in the healthcare sector or financial services. Like I might think, okay, one day we're going to cure cancer. So that's one thing. But imagine coming up with a technology which can actually transform healthcare. I would never have thought that there will be a technology where I do not have to personally go to a doctor, but just feed up my data, and my entire health records can be stored digitally, and somebody can see it and give me a prescription. But through AI, a lot of such things can happen, right? Especially in the healthcare sector, in the financial services sector, and the growth opportunity in this entire. So a lot of people think that artificial intelligence has been there for so long, right? So why talking about it now? Because growth opportunity in this space is, it can be exponential. It is still a lot of space which is expected to be filled. And let's understand. See, uh, until now, any software which had to be created, humans would create it, right? But now with deep learning, machine learning, which is a part of artificial intelligence, a software can be written automatically. Imagine a software which can be created automatically through machine learning, right? How much beneficial it will be for every industry. And understand this, the opportunity in artificial intelligence now, it took over 2 decades for. So internet was a big disruption, right? In 99 2000, and internet came, it changed our lives completely. Tell me today, I'm talking to you how? Through using internet. And over it took over 2 decades for the internet to add $13 trillion to the equity market capitalization globally, if you check. And you look all these tech stocks, they have benefited from the same. Yes, there was a tech bubble which came, but look at companies like Apple or Microsoft or Google or any other tech company which has grown substantially, right? So this is a lot. There are a lot of opportunities in the AI space, and look into cloud computing, look into Internet of Things. Imagine those kind of companies which are working, which are focused on reducing the internet traffic. There are those companies. So all these companies comes into the AI sector, and this is something again you can always explore. So the agenda for today's webinar is not me telling you, oh, wherever you are investing, stop that and invest here. No, where you're investing, your conventional form of investments, in your mutual funds, fixed deposits, bonds, whatever you're doing, that's all right. All why I'm here is just to draw your attention towards these sectors also, that be a bit more futuristic. It is very easy to invest all in all these sectors. So all I feel is that your portfolio should have a slight exposure towards these areas also. As I said, that disruptive technology has a lot of risk, but at the same time rewards also. So obviously you have to calculate how much risk you are willing to take in these companies. And definitely there are a lot of ETFs which are available, which I'll show you in the live platform before we end this session. Next, we are looking at genomic revolution. Now, genomic revolution is how the disruption in healthcare sector has come in. And genomic revolution, it is expected to transform the entire healthcare, and it's the next wave of innovation. Because uh, okay, let's understand what genomic revolution is all about. It is about understanding the genetic information of a patient, how the body actually works on a molecular level. Back in 2003, uh, if a human body has to sequence their genetics. So basically, why it is called genomic sequencing or genomic revolution? because the process involves a genomic sequencing, a DNA sequencing of a human body. And the reason behind this is to detect a disease earlier and match the patients to a precision therapy. Like, for example, if uh, there is a chance of I might get cancer through DNA sequencing, my chances of that will I get it or any other disease I might get or it might be detected at the earlier stage, it is possible through genomic revolution, through DNA sequencing. Now, in 2003, DNA sequencing of a full human body, it costed $3 billion. $3 billion. And it took almost 10 years to complete one computation. Okay. $3 billion and took almost 10 years to finish one computation. Now, it takes you a couple of hours and just $600 to do the same thing. Amazing, right? So, genomic revolution is now, that's why I'm talking about it now. I couldn't talk about it 10 years ago. Why? Because back in 2003 or 4, it was the most costliest process. But now it takes $600 and a couple of hours. And there are companies which are into genomic or DNA sequencing, right? So, sequencing technology. So, imagine which sectors you can invest into. Those companies which provide DNA sequencing technology, those companies which are doing gene editing, immunotherapy, all these kind of companies, and these are available. If you talk to your financial consultants, you talk to us, we'll find out one of those companies which are there, which have the prospects for growth, and this is something which you can and look into. And what we have to understand is, because the entire cost of sequencing a human DNA, it has fell so much, right, from $3 billion to $600. And now this testing is not just limited to research lab. Now it can be adopted clinically, right? Volumes can be done. And this is something which is there, the technological and the scientific developments which are happening now in DNA sequencing. Uh, the same thing for humans, there is something called agriculture biology also. And what agriculture biology does, it can actually help restructure agriculture, pharmaceuticals, and enhance the quality of life. See, there's a lot of land which is not productive, right? There are companies which are using artificial intelligence and a lot of data to create uh, technology which can enhance the productivity of agricultural land, because it is not an unknown concept that not everybody in this world gets to eat food. The agricultural productivity is not same anymore, it is declining. So imagine those companies which are working on developing technologies which can improve agricultural productivity. So friends, all I'm talking about is a futuristic approach towards your investment. Again, I keep repeating this. What you have in your existing investments, it's not bad. I'm sure you have done your full research when you did it, but just open an extra leg and look into all these sectors. This is something which has been emerging now, right? So this is one of those sectors. Going ahead, look into robotics. Now, robotics, it's a funny thing, because we think about robots in our mind, we expect a box with a robot voice doing things, right? But when I say about robotics, I'm talking about companies which manufacture drones, 3D printing technology. Imagine those companies. Tell me, if use your chat options and tell me, Jeff Bezos has a space exploration project or a company. What is the name of that? Amazon or Jeff Bezos recently talked about space exploration, right? After Richard Branson, the Virgin Galactic guy, talked about it, then Jeff Bezos also has a space exploration project. Um, what is the name of the company? Use your chat option. I hope all of you. It's a very informed crowd, because after you answered me about Tesla prices, so I feel that you are already in sync with what's going on. Amazon's space exploration company. Okay, yes, I started getting answers very quick. That's great. Okay, okay. Okay, nice. So okay, I think everybody has read about it. Even if you haven't read about it, just search for it. The company name is Blue Origin. I'm sure some of you must have read about Blue Origin, what it was. So there are companies now, space exploration is increasing. See, has it reached to a point where we should start investing? Uh, it's a maybe or maybe not. But imagine about those companies which are working on using or making rockets reusable. It's a very interesting story. Elon Musk, when he studied NASA's style, he realized that NASA was not able to reuse the rockets. Rockets go up and then gets destroyed because the cost of refurbishing those rockets and reusing it was much higher. So NASA always focused on creating new rockets every time they launch one to the space. What Elon Musk did, he tried to find the technology and made it possible to reuse rockets. So now it's a trend that you can actually reuse the rockets which you send to space. You have to refurbish it, and it's so imagine those companies now they are looking forward to it. So when I talk about robotics, I talk about drones. Drones single-handedly has put two people out of business. One was the cameraman who was shooting from the helicopter. So the helicopter pilot and the cameraman both. They're not needed to shoot these sequences because now most of the movies they're using a lot of drone-based cameras. Look at the weddings, look at the events. So this is something which is now increasing more and more. In the next again future, we will see a lot of robotic based. And now look at what happened during COVID, right? Life-threatening coronavirus, it has changed this no robots vision for good, because robots now they are taking over the work environment way earlier than we expected it. We thought about a Terminator kind of a situation maybe in 2050, but now they're kind of taking over the entire work environment. Look at softwares, sensors, advancements. Look how imagine this way: the population now, the life expectancy of a person is high thanks to the technology and the pharmaceuticals. There is a lot of aging population which is increasing, and the aging population has boosted so much robotics. Why? Because now you need autonomous health monitoring for these people, right? Self treatment, especially amongst elders. So robotics is doing a lot of that in that part. Once the per unit cost declines, the capability is expected to increase, and the robotics can transform every business that depends on physical process. So this is something which is for real, right? Now, that is again one of those technologies. Next is clean power, green energy. And I'm sure most of you have heard about green energy and the initiatives. Climate change has been there for a lot of times. It has been there for decades. People talk about it. People don't talk about it. But then this time, UN recognized that we are under a major climate change drift. In the next 10, 15 years, the amount of floods and droughts and calamities are expected to increase. So clean power now using battery systems, renewable energy, electric vehicles, this is again a trend. So basically, if you look at the green energy or the clean power, a lot of us, we have a vision that it might replace fossils, right? There's a lot of green technology sectors which are hitting crucial points now. It is not hypothetical anymore. People used to talk about or think about cars which will not need petrol. There are a lot of cars now which don't work on petrol, right? Does not work on fossils. Now, also what is going on is earlier electric vehicles would cost you a lot, right? Now that same technology is more efficient and less costly and more profitable. There is so much social pressure now, even in some cases there is a social pressure that has actually been in favor of clean energy. uh, please let me be very clear, it does not mean that every green company is a good investment. See, this is something which is really important for me to say here. Clean energy, green energy. Somebody said that clean energy or green energy is different from renewable energy. I'm combining all of it. I'm combining clean power also. I'm combining renewable energy also. I'm combining green energy also. all of these sectors combined together. Because earlier, if we talk about solar energy, it would be more expensive as compared to any other technology, any other fuel. But now there are countries which are using solar energy a lot. So that is also a part of renewable energy which comes in. When we talk about clean energy, we are talking about cars running not using fossils, just using electricity. So yes, and there are some hiccups. So I'm going to come on both of this. Not every green company is an investment, right? But there is a space where investors could be present. Now look at this way. For the longest period of time, as I said, the EV space always was hampered by a lot of disadvantages. The battery life used to be very short. The cost was really high. If you buy an electric car, you are buying actually a less efficient product and you're buying it at a higher price. But now things are different. Production costs are falling. Consumer preferences have changed. Um, if you see the technology for the battery, when it comes to the range, the charging, everything has been advanced. Some people think EVs are the auto industry's future, right? Most There is Toyota, there is Tesla, there is Volvo, Lucid Motors. A lot of such companies, they are shifting into that direction. When you see clean power, it has become more competitive over like solar and wind energy. If we talk about now, they are not just fringe ideas. It has actually become a lot of geographical locations. It is one of the cheapest options now when you are assessing new power projects. So this is something which is again available for an investment. And when we try to understand the investment opportunities, so if we talk about EV space, there are companies which are creating these batteries. There are companies which are creating packaging for these batteries. Then there are companies which are making battery charger stations, right? So all those companies, they will be coming into those kind of investments. Now, we have talked a lot about the first four sectors. We think about something which we have always, now a lot of discussion has happened in cryptocurrencies, right? Cryptos is a part of something what we call as blockchain technology. uh, Bitcoin was emerged on the basis of blockchain technology. I would not emphasize more on cryptocurrencies or Bitcoins because it is again a product which is not regulated by the central bank. It has a lot of risk. In fact, if when somebody asks me that should we invest into cryptocurrencies futuristically, given how much the price moves, and we'll discuss this once we go back to the platform, live platform, we'll discuss that how often the price of a cryptocurrency moves and how it moves it. The popular opinion nowadays is not to invest more than 5% of your total investment amount, not more than 5% into cryptos. So basically, you keep it up to 5% or less than 5%, right? So this is for those people who are interested in knowing about cryptocurrencies. Cryptos have a lot of risk. The movement in Bitcoin, the movement in Cardano and other cryptocurrencies, day on day basis, it's real volatile. So if you are a conservative investor, if you need that money in specific period of time, or it is your child's education fund or anything like that, please do not be exposed to cryptocurrency. It's a very high risk product, and especially with no clear regulations, it can still be on the up or the downside depending on how the regulations face up. But talking about blockchain, now blockchain is a technology, and we have to understand blockchain is utilized for a lot of things: enhancing the smart payment systems, quick global money transfers, to have a secure financial transactions, to trace data, speed up the shipping and transportation, modernize government institutions, even to detect critical illness. Their blockchain can transform a lot. It's an upcoming game changer. Whether you talk about augmented reality, virtual reality, or the autonomous vehicles, cloud computing, all of this growth in all these sectors are expected to drive the adoption of blockchain technology in years ahead. So there are a lot of companies which have, so companies like Louis Vuitton, companies like Volvo, Walmart, for example, they're already using blockchain for their products. Walmart is using to ensure the safety of their food products. Louis Vuitton is using to ensure that there is no counterfeit of their product. So blockchain can be used in a lot of products, and it's a technology which is more and more developing. And there are a lot of companies which are working on developing. So any company which is developing their own blockchain or is into cloud computing space, again, uh, there are few of those companies which are developing their own blockchain technology, or which are working with blockchain technology, are expected to have advantage or edge over their competitor. So blockchain is here to stay, and in the current coming few years, if we talk about digital payments, we talk about a lot of such products which are expected to make use of it. Within technology, if we talk about 5G was one such sector, because emergence of 5G networks, it's one of the most valuable, one of the most transformative developments, because 5G provides a faster wireless internet access, a lot of bandwidth, minimum delay. And since COVID outbreak, people are forced to stay indoors. So tell me, I mean, when it was lockdown, how many of you would use internet? I'm all of you, right? I mean, if you are at home and not doing anything, a lot of you would continue to use Netflix or Zoom or work or leisure. Internet was the thing. So much use of internet. Imagine on a technology like 5G, how fast it would become. So again, 5G technology related stocks like Verizon, Viacom, all these, Verizon mostly, all these kind of companies can get benefited with 5G technology coming in. Even those companies which are creating infrastructure for 5G can be benefited. So these are few sectors. Now, how you can actually invest into this? See, because these are disruptive sectors, a common advice is you can always look into individual companies, but because these are disruptive sectors, and if the technology does not work or becomes obsolete or is not entertained, then the investments might in that particular company may or may not work fine. So I would always suggest use ETFs to invest into this. ETFs are nothing else. It's a kind of fund, like a basket of companies, which belongs to a common theme, and you can actually find it on our platform as well. So this is, and you can find it on any platform. I think if you look into funds, you will always find clean energy funds. You will always find renewable energy baskets. You will always find AI, genomic revolution funds. These are there. They have already started. Just to give you a small demonstration here, and please keep writing your questions if you have any questions over here. Let me just share this with you. I hope everybody can see this. Let me check. Yeah, perfect. This is just a live platform, which is real-time prices. Let me show you. So go into ETFs here, and all you have to do is search. Let's say, for example, genomic. Sorry. Okay, look at this. So there are a lot of fund managers which are creating these. So ARC is one of those funds, ARC Genomic Revolution ETF. Look at this fund. Now, this particular fund, it's like a basket of companies put into it. So when we are looking at this, and let's look at a price chart also. Look in last 2 years, from 9 September 2020, it was somewhere around, let me increase, it's increased. Okay. It was around 68, went down 22, bounced back, went to 113, came down 72, 92, and now it's around 81. So mostly it has been around these levels on an average. But as we said, we are talking about a futuristic point. So this particular fund focuses on those companies which are involved into DNA sequencing or genomic sequencing. Make no mistake, you can always invest in individual companies also, not necessarily do it in ETF, but something which is a disruptive, like space exploration, right? It is talked a lot about, but at the same time, would you invest into individual companies which are into space exploration? May not be a good idea. Always invest through funds, because the chances of one company, specific company, failing into the technology could be high. But if you invest into a whole fund, the fund will cover all different aspects of space exploration or genomic revolution or blockchain or others, right? So this is one of the ETF. Check, for example, I talked about another sector, which was okay, robotics, for example, right? We were talking about robotic. Look how many funds are there. iShares Robotics and Artificial Intelligence Fund, Global X Robotics and Artificial Intelligence Fund, Robo Global Robotics and Automation Index, ARC Autonomous Technology and Robotics Fund, right? So there are so many of them. Also, something which here we provide you, it's a share basket. Now, how a share basket would work, just like a fund, but baskets have less companies than normally a mutual fund or a ETF would have. And these companies, again, and the daily movement of a share basket is much more, it's much more volatile than a fund. And these baskets are created by the brokers. So our brokers, CMC Markets, have actually created these baskets. And I'll show you the concept of the share baskets, what they are. Because many a times we see that there are a lot of such products. So let me show you here. Look at the product library and share baskets. Look here. Look at this. Automation and robotics, collaborative technology, cyber security, driverless cars, EU automobiles, gaming, remote lifestyle, renewable energy, right? So all these kind of, and look at renewable energy basket here. Let's look at the price movements for a while. I will take pandemic fall also into this picture. So here, if you see, it was around $5,389 for one unit. Pandemic happened, it went down to 2620, almost 50%. And after that, it went up in November when Joe Biden became the president. And Democrats have always favored clean energy and renewable sources. It even went up and went all the way to 14,000. Imagine, I would still not take pandemic low because pandemic it went down and went up. So let's compare it when before pre-pandemic, which was 5,000. Even if you see pre-pandemic levels from 5,000, it went all the way to 14,000, came down to 8,000, and right now it is around 95. Why it came down in 2021? Because in 2020, oil prices also fell because global demand went down due to the lockdown. So the expectation from the renewables were less, but they outperformed. In 2021, when the world was back on its feet, we saw oil prices going higher and energy actually outperformed the renewables. So we saw the prices declining during the earnings season. But look at the support level over here right now also is somewhere around these levels. So again, when we are looking at the futuristic point, innovation in these kind of areas and these kind of industries continue to increase. So a lot of these sectors, what we talked about, look other ETFs. So ARC ETFs comes with a lot of such. Look at fintech innovation, financial technology, mobile payment, digital payment. Look at ARC innovation funds, next generation internet, all those companies which are focused on reducing internet traffic, space exploration ETFs. So all these kind of investments in the form of funds are available. So I wouldn't, if you don't want to do a personal, if you don't want to invest one-on-one in a company, you can always invest into these kind of funds, and that can probably make your life more easier, right? Because this kind of tells you that, okay, you don't have to invest into one company, you can do it in the basket. So you can invest in the form of shares, in the form of share baskets, which I just showed you, and in the form of ETFs also. Now, here is quick snapshot of share basket themes which are available to you. See, US gold and oil and gas, again, these are not the disruptive ones, but they are also available in the form of baskets. But if you see something like remote lifestyle, collaborative technology, automation, robotics, driverless cars, then look at mobile payments or look at cybersecurity, renewable energy, 5G. All these baskets are available for you to invest and trade in. And it's very easy. How would you do a transaction? Let me quickly show you on the live platform that how you can do a transaction right away. Here. So look at this. So let's say, for example, you want to invest into a Genomic Revolution ETF. I have $100,000 in this demo account. I click here on the order ticket. This price is 81.94. I have $100,000. So let's say I put 100,000 in the amount, or let's say, let me put $50,000 in the amount. So it calculates automatically 609 units, 610 units. I click here on buy, trade is placed, and this is where I take. You can check your positions live on the platform right here, accounts, positions, right here. You bought ARC Genomic Revolution Fund. B stands for buy, how many number of units, total amount, and this is the current P&L. And it will continue to go up and down depending on how it works. You can always close your trade very easily by using this option. So everything remains in your hands. You can quickly check. You don't have to rely on a fund manager to do it. There's a question: what is the difference between an ETF and a basket? Uh, so ETFs, they are prepared by these fund managers like ARK and Global X and BlackRock. Concept is actually the same. We are talking about a basket of companies which are focused on one specific theme. Somewhere where most of these share baskets, this is actually prepared by the broker. You will not find share baskets on exchange. ETFs, these are prepared by the fund managers. So a lot of brokers can provide you the same ETF, but the baskets which you see right now are custom made by that specific broker. So if you go to any other broker, you will not find the same basket with that same price. But that being said, exchange traded funds or ETFs, uh, the concept is same, that you are focused on a basket of companies. But share baskets, while they are focused on, let's say, AI and robotics, they are mostly into US based companies. But ETFs are just more than a theme. Let's say you said that I want to invest into companies which have good dividends, or those companies which have a history of increasing their dividends in the last 20-25 years. All you have to do is you search here dividend. So there is a fund called ProShares S&P 500 Dividend Aristocrat ETF. And this fund focuses on those companies which have a history of increasing dividends in last 20-25 years, right? Similarly, if you talk about value stocks, right? A lot of, so which are the value stocks? Value stocks are those stocks which provide you a certain dividend and they are less volatile. Growth stocks are like Facebook, Amazon, Tesla. They don't give you dividend. Value stocks are like Coca-Cola, AT&T, Vodafone, these kind of companies which are less volatile, but they give you a certain amount of dividend. So you can find a fund which is a pure value fund, which is focusing only on those companies which are value-based stocks. So ETF is a much more broader concept, but the working of an ETF and a share basket is same. Investing into a basket of companies which is focused on one specific theme. ETFs can also give you a geographical diversification. So if you're looking at dividend-based dividend aristocrats, so those dividend companies can be from US, can be from Europe, can be from Asia. So it might give you a geographical diversification also, right? But the working of both, and ETFs could be less volatile depending on their subject. Most of the funds are less volatile as compared to the share basket. Share baskets are more volatile, can be a day-to-day trading instrument also, can be good for long term. But ETFs are mostly used for the long-term investments, right? Taking more questions here, just 1 second. All right. So there's a question here. Can we get this demo account? For sure. All you have to do is just talk to your relationship manager and they will be able to provide you this demo account as well. And you can create your own watch list and search the product. And you're most welcome for a one-on-one session with me if you want to. We can definitely have a one-on-one session. I can personally tell you how to use this platform. It's very easy, a very user-friendly platform, and you don't have to worry about it. You're most welcome in our offices. Come and sit and we'll train you here as well. And none of this implies any kind of cost, because at the end of the day, all these are knowledge-based sessions. And we continue to do these webinars every week on different topics. So that is one. There's one more question. Okay, how to open a live account? Live account opening is really easy. You just have to fill a form online. You talk to your RM and they will explain it to you. Just have to fill a form online and submit documents, passport copy, visa page, and address proof. It will take 2 days and you will get your account number. So that's very easy. Another question here, can I own the stock? So the platform which I showed you, they provide only CFDs and derivatives. But if you want to have a direct ownership of the stock, we provide you interactive brokers through which you can actually own the stock as well. Which country share market is more rewarding? It's a very good question. And answer to the question, the answer to the particular question is very simple. Look around you what products you're using. If you're using an iPhone, or if you travel in a Boeing plane, if you have a debit or credit card which says MasterCard or Visa, if you're taking your delivery through Amazon, if you're using a Johnson & Johnson product, if you have taken a Pfizer vaccine, because all these countries are US based. So I'm not saying that US is most rewarding, but then US stock markets have the highest volumes. And I'll tell you the reason. If you see GDP wise, GDP of a lot of emerging markets like India and China is 6%. India is like 6.2%, 6.5%. China used to have a double-digit growth, but their stock market returns were always less most of the time than US market. What was the reason behind it? Because US stock markets always have the highest volumes. Even, you know, which country has the highest bond products library? It's UK, but the largest bond market is still in US. So US provides a lot of liquidity. So yes, I mean, when it comes to volatility, when it comes to understanding in terms of currency appreciation, if you see from 1990 till date, Indian markets have been profitable, but then there is a lot of risk for the currency depreciation. At the same time, if you see US markets, the percentage increase is higher. So the products of lately which we are using more, like MasterCard, Visa, PayPal, Tesla, if you have a Netflix account, if you have a Facebook account, all of these are US based companies. So it's really a no-brainer to keep a leg open for the US stock markets. Please throw some light on CFDs. So CFDs are contract for difference, what we call it. But one thing which you have to understand to make you easier, if you're buying a CFD, you are not owning the stock. You do not earn the voting rights. All you are buying is a product which is mimicking the price of the actual stock. So if I say that this is Apple stock on exchange, right? Normally what you expect that if you buy a share of Apple, you earn the voting rights and you own the stock. You, in the shareholders register of Apple, your name is written and you get a stock certificate. This is what. But if I tell you that, see, I am a broker, okay, and I am providing you this Apple CFD, which mimics the price of this actual stock completely, okay. To buy this, if you have to buy Apple worth $50,000, you have to put $50,000 and you will get the stock. Over here, you can just pay, for example, 10,000 and you still get stocks worth $50,000 because CFDs use margin-based trading. Let me give you a very quick example here. What I did when I bought the ETFs. Look here. Let me zoom this so it will be more clear to you. See, I had $100,000 over here, right? And I bought this ETFs worth 50,000, right? But because it's a CFD, it uses 20% margin, which means to buy, look here, to buy anything worth 50,000, look here, all I have to block is 20% of 50,000 from my $100,000 equity. Rest 90,000 is my available balance. I can trade more with it. So CFDs use leverage. Leverage is riskier if you over abuse it, right? But leverage magnifies both risk and reward. So if you want to learn more about leverage and margin trading process, let's book a one-on-one session and I'll be more than happy to explain it to you, use platform with you. And owning the stock directly, you have both the options. I can provide you a platform where you can own these ETFs and stocks. I can provide you a platform where you can have CFDs. Part about CFDs is that you don't have to block the entire capital. You can block a percentage and you can still own you can still speculate on the prices or invest long-term into that particular product. Question, there are many companies where we can buy anything and the charges for holding are not there or very less. But companies here charge for holding and other charges. Why should someone trade here? See, um, holding cost is a standard charge. Uh, if a company, which is a CFD based company, so like for example, if you want to directly own the stock and not provide the holding cost, like interactive brokers, for example, we provide interactive brokers, you can own a stock and there is no holding cost. But if you are buying a CFD, because CFDs are leverage based products, that means that you only give a percentage. Rest is given by the broker. So it's a kind of borrowed money which you are investing in. If anything which is borrowed will have an interest over it. That interest is what the holding cost is all about. So CFD brokers will definitely have a holding cost. And most of the time, holding cost is combined with the LIBOR plus the broker markup. Over here, we still do not charge the broker markup. We just do what the LIBOR is or what the interest rate in the market is. Right now, it's pretty less, so it does not pinch the consumers. But at the same time, if you're doing CFDs and leverage trading, holding cost is going to be there. You don't want to pay holding cost on the stock. So we provide you both the things. So nothing to worry about. The only reason why people trade here is, there is a concept called short selling. And like you pay interest, sometimes you receive also. The holding cost is something which you receive as well. And something, because short selling allows you to borrow the product from the broker and sell it in the market. So hypothetically, if you sell anything and you get that money, there will be a certain interest which you will receive on that. So it goes both ways. Yeah. Like, for example, if you short sell cryptocurrencies or Bitcoin, you earn 15% a year depending on how much it changes. So that is the reason that why clients use it both ways. How much you're charging brokerage? So brokerage, again, cost is something which we can always sit and discuss, because cost depends on which platform you are using. So which equities you're using. If you want, talk to me. I'll send you an email and it will have schedule of charges of lately. I'll still tell you this thing for those people who are worried about the cost. Cost and charges should be the last thing which you should be worried about. In today's world, all you have to focus on that which consultant is able to provide you a strategy which, forget alone, makes you profit or anything. I never talk about profits, because profits and gains is not something which is in my hand. But your consultant should be able to create strategies which should be capable of minimizing your loss. I did a session on trading strategies, and if you go back to YouTube and check those sessions, you will realize we are doing a lot of strategies which are aimed at minimizing your loss, reducing your risk, managing your risk. I never use the word profit that you're going to make money. So pay the consultant extra if the consultant is working towards minimizing your loss. I hate to say it, but that's how it works. Cost should be the one factor which should not be in your mind in the world like today. We are dealing with a market which goes up and down for sometimes for no reason, right? It's the one of the most volatile phases we are facing. How will last 4 years with Trump tweet market would move? So your first priority is strategy. Your second priority is understanding how this strategy works and calculating your risk and reward. Third priority should be, okay, how much it's going to cost me? So try to work with that. And definitely I'm available for a one-on-one session. So you would not get involved into, I would not allow you to get involved into anything which you do not know about. So that's why we do these webinars and trainings one-on-one, just to make sure that even before you become a client, you understand whether this is your cup of tea or not. These are mostly awareness sessions, and whatever I'm saying, do not replicate in your portfolios until you are thorough and clear about how financial markets work and how these kind of strategies, how it will fit in your portfolio and your risk appetite. Right, perfect. So once again, before all of you leave, I would like to extend my thanks on behalf of my company and my family and everyone, to all of those who are connected to healthcare industry, doctors, professionals, midwives, nurses, first responders, all of you who have been risking out your lives in last 2 years and continue to do that. I'm extremely grateful to all of you. If you have your sons, daughters, friends, colleagues who are into this area, or if you are one of those, once again, a big vote of thanks on behalf of me, my family, my company, everyone here. We owe you so much, and you guys are the real heroes. I hope that pandemic is over soon, and all of you remain in good health and good wealth. So continue to invest, and let's meet up next week once again for a different session on something different. And meanwhile, I'm available for any one-on-one sessions if you're interested. My name is Yogesh. Have a good night, and let me know if you have any questions further. Please review us on Google Review if you find this session informative. It kinds of keep us more motivated and encouraging to do more of these sessions. Just write Century Financial Google Review, and you can do that. Would really appreciate if more and more reviews comes in. So thank you so much for your feedback, and I'll meet you soon once again next week.